All right, welcome everybody. Great to see everyone. I just realized I hadn't gone live, so I was talking to nobody for about a minute. Great to see everybody. Huge shout out to those of you that joined me for the Saturday class yesterday. We spent about 5 hours together covering all my current day trading strategy, how I've been trading 2022, how I've been focusing on what's been working in terms of time and volatility, how I'm managing the lower volume and lower participation of summer as we wait for some significant moves in the broader averages, which I will be absolutely watching for today and into tomorrow. I know a lot of you know I've been waiting for that correction up into the wave. We've got what is likely to be a quarter end rebalancing happening right now. Lots to like about the way in which that we're finally getting some moves that should be useful to us on the daily time frame. So this week should be the official reintroduction to the daily time frame in addition to our intraday tactics. This is when I am at peak happy Raghee, because now we've got multiple time frames that we can take advantage of, keeping our pipeline of opportunity for very, very full. So this is going to be a really exciting week. We've got the first day of live trading for the day trading class. And for those of you that did not join us on Saturday, you can still join us for live trading. You can still get the indicator special, catch the class on replay, all that good stuff. So if that was something you thought, gosh, I really did want to take that class and, maybe it's too late. It's not. So looking forward to seeing you all in live trading. But this show, as always, is about your questions, what's going on in the broader averages. We're going to take a look at all that and more as we scan these markets together. Of course, the S&P, NASDAQ, Dow, gold, dollar, euro, treasuries are all open, so we can at least take a look at the early glimpse of the Asian session. Now, those of you that took the class know we're not quite to that window where I would look at opportunity for Asia, but it's getting there. So, key up those HPMRs. Remember, we want to wait for that participation for that window to open, and then we'll see what Sunday evening might bring us. Okay. All right. So first up, hey there, Nick, how are you? What principles do I follow for position sizing? My general principle, Nick, is a variation of fixed bet size. And that's really the main foundation. Fixed bet size meaning every one of my day trades, every one of my options or futures day trades, every one of my overnight swing trades. These are approaches that I have for the better part of 2 decades now focused on remembering one really important thing. All my position sizing is based on one thing. I don't know what's going to happen. And I certainly can't say, well, this trade's going to be a big winner and this one's not. I hear traders talk like that sometimes. Oh, this is a sure thing. This is the big trade. This is the one I'm looking at. Please, I'll tell you this much. Over the years, when I look at a certain segment of a season, a quarter, a month, I am almost always surprised by the trade that ends up being the one that outperforms the others. I'm almost always surprised by that because we don't know where the markets are going to go. We certainly can't project that over days or weeks or months. So by fixed bets, I know that every one of my trades should be high quality. Every one of them is going to present a similar degree of risk to my account. And it really does presume that we can't foresee which one of our trades of the ones we take are going to be the big winners or the big losers for that matter. So that's probably, Nick, that's the most important principle by a landslide that I have adopted very early on in my career, which is based on, I don't know what's going to happen. So let me position size accordingly. Now, all those folks who can see into the future and their crystal balls are ready to go, hey, good for them. But I definitely operate from a risk first, fixed position size, and remembering that nobody knows where the markets are going to go. We play probabilities, not certainties. So thanks for the question. All right, Sean asks, ready to hit? I am, Sean. I am definitely ready to hit it again. We've got our live trading session, of course, for the class on Friday. We've got our Wednesday session with the Mastery folks. A lot of Mastery folks know, Raghee, are we going to start to do some more intraday stuff in the Mastery? It is going to be added to absolutely the Mastery probably by the middle of this month. I'm going to finish up the live trading for the class, and then we're going to start to segue into more of that conversation in the room with us day trading together. So I am very excited about that. And then, when we think about what's happening come July, we definitely know we're going to be dealing with, we've got a 3-day weekend coming up. But then when we go into July, we've got another Federal Reserve meeting at the end of the month. So there's plenty to make this market move. And we definitely want to take advantage of that as much as we can. All right, next question or comment. And thanks, Sean. I am too. I'm raring to go. Is pharma healthcare the next big trade? Arthur, I have no idea. We can scan it clearly. Like I said, I just find any conversation, if I ever do that, if I say this is the big one, I better justify why I think the focus might be there. So let's start with, when FOMC is coming up, could I say, hey, we're going to have a lot of attention on treasuries, dollar, euro, gold, and the indices? Well, that's not foretelling the future, because we know that when certain events happen, when certain data is released, when certain news lands, it's going to hit harder in certain parts of the market. Like earnings hitting a stock. That's not telling the future. That's just knowing where the catalyst is going to create the most volatility. But as far as if I'm going to ever say, is healthcare the next big trade, in what direction, right? Is it a long? Is it a short? And no, I actually don't see anything here that would tell me there's an edge or there's a certain amount of clarity in healthcare that would cause me to, look at it with some disproportionate attention, right? So I hope that makes sense. Frankly, Arthur, not a clue. And I'm not even going to go so far as to say nobody knows what's going to happen next. What we can do, though, is look at healthcare. What's up, buddy? You just came in. Sorry, the cat does not realize we're doing the show right now, buddy. You can wait. So remember, nobody knows either. We want to maybe crack open the XLV. We could take a look at some of the high concentration weighted stocks. Some of those might be looking rather interesting. We have some good downtrends in Abbott and Medtronic, and then everything else is fairly choppy. If I'm looking bullishly, look for names north of the 200 exponential. But XLV itself has yet to cross that threshold. So be really careful with that, thinking that we're going to find what the next big move is. I've found that a lot of folks will make broad. Look, I see a lot of clickbait where S&P is going to whatever shocking number, or bonds are going to whatever shocking number. Let's just follow the trend as much as we can. And I think that will put us on the right track more often than not. So thank you for the question, Arthur. It's one I think a lot of people wonder, is there some reason to give disproportionate attention to certain sectors or stocks? And generally, I would say no. All right, Prima Jenner, how are you? Great class on set. I appreciate that. We had a great group on Saturday. Really good questions. We had about a 45-minute Q&A. Class took about 4 hours, so I definitely appreciate everybody, the participation and the attention and the eagerness. It was awesome. I was wondering if I could put in my analysis on the question slides. If I could put my analysis in on the question. Prima Jenner, if you have a request for the class, email it to customer support or one of us. We'll go from there. Okay. My analysis on the question. Yeah, I'm not quite sure. I don't quite follow the question, but we will be, by the way, working on the slides, kind of polishing them up, probably going into tomorrow. I would think I'll be able to get the slide deck to the class participants probably sometime Monday afternoon. So I'll be polishing them up a little bit Monday morning. looking at some of the questions that came up, but the slides will more or less look like they did in the class, and with a few additional slides that I made note of while we were in the class. All right. Next up, I appreciate that, Jim. I loved giving it. It was a lot of fun. I do appreciate that. Thank you. And then we've got the live trading coming up. So we're not even done yet. We're not even halfway through. That's the fun part. When day trading, do I look at market internals before getting in a trade, or do I use only HPMRs for entry? Matt, I'm gonna say something super controversial. I don't give a rip where market internals are. And I'm so glad you asked the question. Look, every now and then we're going to hear something about some extreme put call ratio. Okay, and do I buy or sell that day? When does it happen? They never know, do they? They just throw it out there and say, oh, we're at an extreme. Maybe it's an extreme tick reading. What do? Is the market going to continue to go? Is it a system? Some kind of algo kicking off? Is it just the morning volatility? What is it? So my issue with most market internals, the only one that I look at that I think would pass as an internal is the VIX, because there's a futures contract associated with it. Here's my issue with internals. So I want to know why. You might say, wait a minute, Rog. A lot of people look at these things, and that's fine, right? Some people like mayonnaise on their hamburgers. So, to each their own. However, let me tell you why. This is hugely important. Think about the composition of the S&P. All right, so let's pull this up. I'm going to go to the SPY. This doesn't matter if it's S&P futures, SPX, or the SPY ETF. So these are 11 stocks. The first 6, and definitely the first 10, account for, and don't hold me exactly to the number, but it's over 20%. That I can tell you for sure. It's over 20% of the weighting within the S&P 500. That means, give or take, the other 490 stocks are weighting the remainder of the 80%, but less than 10 have a absolutely disproportionate amount of influence because of the way that stocks are weighted, not evenly, within the Dow, within the NASDAQ, and within the S&P. So a small number of stocks are moving the index. I think a lot of us know this. So what does this have to do with market internals? Market internals aren't weighted that way. Now, maybe at some point in time, someone will figure out, hey, it really makes sense to weight internals according to the weighting of the stocks in the index. If and when that happens, I'll look at market internals. If not, essentially, do you remember that scene in Indiana Jones? I love that movie, Raiders of the Lost Ark. And remember when Indy and Sala find out that the dude who had the emblem seared to his hand, they didn't know it was on the other side of that emblem, that round emblem. Well, what that did was change the length of the stick, that changed where they were digging. Does anyone remember that? One of my favorite movies. Okay. Remember when they realized that they were 2 meters off? And all of a sudden they said, they're digging in the wrong place. That's what I feel about with internals. They're looking in the wrong place. They're looking at a weighting that doesn't reflect the actual weighting of the sector, or in this case, of course, the index. And that's my issue with it. I hope that makes sense. Because if I'm looking at something to measure an index, it really should be weighted in the same way, because all the stocks are not of equal weighting, and yet ticks and different types of market internals don't consider that. All right, so enough of that. But yeah, it's a fairly controversial take I have. No knock against anybody who does. If they have great success with it, awesome. But I find it's measuring, they're digging in the wrong place. It's measured incorrectly. So awesome question. And do I use HPMRs? Not only, not only, Matt, because one of the things that we did in the class was talk about how to understand what the HPMRs are plotting, where to stack indicators in order to get a good signal. So no, I do not follow blindly my very own indicator, my HPMRs. No. So let's see what they look like right now, Matt, to your point. Let's see here. Let's pull up the S&P. So I'm not quite to my trading window for the evening, but you can see here, structure matters hugely. I think a lot of my traders in the class are saying, Oh gosh, Rug. Yep. We see it. We see what we would do right now based on structure. And structure dictates strategy, strategy dictates indicators, and it tells us what the directional bias is of the market. So a lot of you are probably crunching those numbers we did in the class. So yes, HPMRs, but not only in that. In fact, there is no indicator that I use on its own. And then as far as internals, well, hopefully that made sense. 'Cause I never just want to throw something out there and not at least tell you why, right? So thank you for the question, Matt. Great question. What are my thoughts on China names? I'll be frank, I haven't really given them much thought. But if I'm going to do that, the easiest way to understand what's happening is to look at things like KWeb, because a lot of the names that are in play will be weighted in this corner of the market. This is just trying to go bullish after a long period of chop and bearishness. That is a fact. And we're still below the 200 exponential. So there's a high likelihood that we could find overbought resistance, but it has legitimately just recently found double green. So what is it? KWeb? What's the other one? eWeb? So KWeb's usually the one that I look at. So yeah, it's trying to gain some traction, but I'd be really, really careful. And then you want to make sure you know what stocks are heavily weighted within the KWeb. BABA is in the same, but BABA is actually choppy still. So BABA is actually a short up around 124. All right. What are my thoughts on STR after the, short the rip after the July 4th rally ends? I don't know when the rally is going to end. We know going into the end of the month, it's very likely we're going to continue to see that rebalancing. If that is indeed how the cash is being deployed at the end of this quarter, which I agree with you. I suspect that it is intensely the last 8 to 3 days of the month of the quarter. That said, as long as we're double red, we can short the rip. Yeah, I'm going to rely on my multi-trend or my right here. I mean, this is a trend, trade and momentum flags, right? My Momo flag, my trend flag. I'm going to keep an eye on those. And if we're double red, then short the rip absolutely makes the most sense. Absolutely. Next up, Marco. How are you, my friend? I'm a proud elite member of the day trading. Oh, awesome. So we've got a lot more to come, Marco. So those of you that are going to join me for live trading, and you certainly still can, I am going to, and I mentioned during the class, and we'll make sure we update the schedule to everybody. We're going to add 2 30-minute extra chats. And the reason they're 30 minutes long is I want to show you how we are going to live trade, retail sales and non-farm payroll. So we're going to add a couple little mini live trading sessions so I can show my futures traders and my futures options traders how we can trade those 8:30 hot zones. So yes, I'm really looking forward to the 4 sessions, and then we're going to add those no mini sessions so I can show you some pre-market setup. So I am very looking forward to that. Would I please explain again how I calculate the line in the sand? Andrea, the one that I look at is the previous session close. That's the one that I talk about the most here in our open sessions. Of course, if you took the class, there's a couple others that I look at, and understanding structure is a big part of that. But previous session close is a huge one. Yeah, it's a huge one. Previous session close. All right, next up, can I speak to the importance of trade psychology? Oh, it's everything, Mr. Walker. It's everything. A book or a podcast? I always look to my bookshelf. What I Learned Losing $1 Million is by a landslide my favorite psychology book. After that, my friend Denise Scholl's book, Market, the Mind Games book. I love that one a lot. And I'd say anything that you can get your hands on regarding cognitive biases. So I actually have this little deck of cards that I love to have handy. And as far as my preferred psychology books, those are it. What I Learned Losing $1 Million is probably one of the best out there. And then I do love the Market Mind Games. And Denise Schull has worked individually with a lot of traders. Gang, most trading psychology books are either rooted in game theory, which is great, probabilistic thinking, or it's rooted in sports psychology. And if you're going to read about sports psychology, then my favorite, and if you like that kind of more sports psychology oriented trading, then go to what is widely considered one of the leaders for fathers of sports psychology, which is H.A. Dorfman. And if you're a baseball fan and you want to learn about sports psychology, the psychology of hitting is, to me, one of the most direct analogies to trading and investing. And I like the H.A. Dorfman book about hitting. I'm a big fan of that one, The Mental Game of Hitting. That one's a big one, H.A. Dorfman. So those are the ones that I would recommend. And then again, anything you can do to get your hands on cognitive biases. Now, I'm trying to remember what the name of this company was that has these cards, but I love these. So every one of these, here's a circle of competence, Bayesian reasoning. The cognitive biases are going to be a huge part of what helps you improve your self-awareness as a trader. So those are my choices. There's a lot of others out there, but those are actually my favorites for sure. Thank you very much. Let's see. Stacy says, how do I know I have the most current HPMRs? Stacy, if you have the ones that we put in there in front of the class, so thank you for taking it. You have the current ones. I believe that Lorna Bot has updated all the indicators. So everyone on, say, TradingView and so forth should be up to speed. And then I do believe the bot and I are going to pull a brand new set of HPMRs the morning of, probably the evening of or morning of, right before our live trading. And we'll have a brand new set because we'll be past the FOMC. We'll be past the end of the month. And we're going to definitely have a chance to look at the volatility that could have affected the historical movement, and we'll have fresh HPMRs in front of live trading. So that's the plan for the next update. So whatever you've got now from the class, you are good to go. So I appreciate that. Like I said, I had a blast teaching that class. Thank you. All right. Jerry asked, thanks you for sharing the training teaching on risk management and position sizing. I appreciate that. We call it the Holy Grail. So anyone who's in the mastery, we have the foundational Holy Grail video, risk management and position sizing, and the advanced version, where once you understand the foundation, then you know where you can kind of tweak the knobs and dials and levers a little bit to start to customize the foundation of my approach. So if you're in the mastery, make sure you take a look. Lorna probably sends those links out once or twice a week at least. And definitely we touched on that in the class. And I think for a lot of traders, we think about secret squiggles and strategies and all the things that we use to enter the market, but the reasons we exit, target, and stop, those are the most important keys to risk management. Yes, even targets, like a lot of you learned on Saturday. So thank you. I appreciate that, Jerry. Do I find it helpful to watch the VIX in my process? Yes, only the VIX. And you know why? It's a futures contract. So we can trade it as well. And it does have a good, now, is it weighted the way I need it to be weighted? No, I look at it for the merit of psychology, and it is a futures contract. So it actually is a tradable contract. And for that, even if I wasn't using it for understanding what the market is doing, it's still viable as an opportunity. So that's the only one that kind of, as I mentioned earlier, kind of straddles the line between it's just digging in the wrong place, or it's a viable contract of its own right, which it is in its own right. All right, next up is, let's see. Thank you for scaling. Oh, yes. Jerry, you've been in sector since March? Oh, very cool. Very cool. Sharky Tor. Yes, I day trade here at Simpler, and we're going to do more of it in the Sector Secrets Mastery, which is my main room. Yes. Is the HPMR indicator available is it a paid indicator or available for free? Well, Satya, not to make it confusing, but I have for years now in the futures room and in my sector secrets mastery made the NASDAQ futures, S&P futures, so the ES, NQ, YM, and RTY. I have consistently made those symbols, those four, which are the most popular. I've made those available and updated. It's not just having the indicator, gang. It needs to be updated because volatility is always expanding and contracting. Any options traders know this. Is implied volatility or IV percentile fixed? No, we need to know what it's doing day to day, session to session. So same thing goes to the HPMR as far as its sensitivity to market behavior. So those four contracts I have made available for free for years and will continue to in those two rooms, Sector Secrets Mastery and the Futures Room. But we've expanded those packs to about 4 dozen symbols, crude and gold and treasuries, stocks, ETFs, and that is paid. That is a paid version of the indicator. So thanks for the question, Satya. All right, next up is Frontman, reading Forex in 5. Oh gosh, talk about a blast from the past. You say you used to use you say you used to manually draw support and resistance occasionally. Disagree with automated patterns drawn by the computer. How does such a disagreement occur? Well, Frontman, please remember that book is now 12 years old. So the indicators, the coding, the platform capabilities, I mean, a lot has changed in 12 years. And that book was published in 2010. So I disagree with a lot of them because I just hadn't got code or gotten to the point where I could code in a way where I have levels that I agree with. Darvis 2.0 and 3.0 didn't even exist then. Those were not tools that I had. I was using tools that were running on eSignal at the time, I believe. So that's going way back. So how does a disagreement occur? Well, there are factors. There's actually 4 factors to a trend line. And those same 4 factors apply to support and resistance if you're going to automate that. Darvis uses a completely different logic to automation of trend lines and support and resistance that I would have used over a decade ago. And Darvis is how I solved that problem with a 60-year-old process that we modernized. And that's how I solved that problem. But the disagreement occurs normally when the system just cannot identify usually the more near-term levels. And remembering, the cognitive biases like I talked about, recency bias is a very, very important one. And I want my indicators to reflect a certain amount of recency bias. I'm trying to see if I have the card here for it. And Darvis does it, but those indicators that I was using back in 2010, 2012, I think 2012 is when I started using Darvis. 2010, I didn't have it. 2012, 2013, we started using the Darvis process. So that's how we fixed it. And that's how those disagreements will occur because of mostly recency bias. All right. All right, moving on. Do we have access? If you're an elite member, gang, thank you for being a member of Sector Secrets Mastery. But I need to remind everybody, classes are classes, mastery is a mastery. The class people are not going to get mastery trades or mastery time, and the class is separate from the mastery. So the class doesn't have access to the mastery. Mastery does not have access to the class. Okay, so those are they are separate, and that's out of respect for both groups. Right? Those out of respect for both groups. All right. Let's see. What else do we have here? Yeah. So if there are weighted tools, and I know there's some weighted tools that are making their way into the marketplace, and I'm super excited about that. And that's something when the bot and I have talked about that for a while. At what point might we talk about creating our version of market internals that are weighted in a way that respects the way in which the indices and the ETFs are weighted. But it is a tricky thing. And that means every single ETF, every single index would actually need its own indicator weighting. Not an easy thing to do, but something that in the future I might look into, if I think it could be a significant needle mover. Is TOS the preferred platform for my indicator, or does TradingView work fine as well? MVC, Lorna Bot has been doing my coding. She takes care of all my indicators, by the way. And the The TOS platform I probably use the most, but Bot will tell you she likes TradingView a lot. But we use both. But I will tell you, because most, and I mean by a landslide, of our community uses TOS, I use TOS visually the most. But I always have TradingView running during the trading day, and they both work well. They both work well. Okay. So as far as where do you find the new HPMR? Well, if you're part of the futures room or the Sector Secrets Mastery, you can go into the room drive and grab the current HPMR for those indices that I mentioned earlier. And if you're part of the class, well, we've got the full subscription as it stands right now available to folks who took the class. And again, we're going to be expanding the list, and we are going to be updating that on a fairly regular basis. So I'm very excited to finally have this sort of alive and breathing version of the HPMR that I've always wanted to have. And we've been fine-tuning the way that it plots, and we've been updating it for the last 8 months. Now, mind you, this is a process that I created over 12 years ago, and we're finally getting to a point where I really like the way in which it runs on the platforms, doesn't bog them down. We have them on TradingView, so really excited. So for right now, it's part of the class, and going into sometime into July, we'll figure out what we're going to do ongoing with folks who want to grab a subscription. All right. So gang, thanks as always for being a part of the weekly show. I do want to mention before we go that please do keep an eye on the calendar. That's one of the things we talked about in the class. We've got core durable goods coming out tomorrow, pending home sales. We have some really important data that's going to be released tomorrow, which could make for an interesting morning. Pre-market, my traders who have the HPMRs, know the pre-market window, keep an eye on core durable goods. And then going into our second window of the U.S. session, our pending home sales, Christine Lagarde speaking at 1:30. And if you think that's not potentially a needle mover, let me tell you that it will be. It's the second most significant central bank as far as messaging. It's going to affect the U.S. dollar. So if you have a U.S. dollar trade, keep an eye on Lagarde at 1:30 p.m. Eastern. So take a look at this calendar. Consumer confidence on Tuesday, ECB and Powell. Oh my, look at this. ECB, BOE Governor Bailey, Fed Chair Powell, all on Wednesday. Heads up, heads. And if that wasn't crazy enough, here comes Bullard. Very busy Wednesday. Be aware that that is going to be a caution day. We go into core PCE on Thursday. Why is that a big deal? That is the Federal Reserve's pet inflation number. Data in growth, data in inflation, data in jobs are all potential significant market movers, because those are the macroeconomic pillars that the Fed is going to build their monetary policy and messaging upon. So when we have our macro market deep dive session on Tuesday, Sector Secrets Mastery folks, we've got a lot to talk about on Tuesday as we discuss what's going on with this economic calendar and a number of significant hot zones. ISM manufacturing coming up on Friday. That's going to be the first day of live trading. And we will have a red hot zone as well as a bank holiday to contend with. Bank holiday in Canada, red hot zone for our opening day of live trading. And then, of course, you go into next week. This week is going to culminate into a, as you can see here, three-day weekend, bank holiday on Monday. All right. Now, last time we had a bank holiday, I did do some futures trading, and HPMRs can set us up for that. I'll talk about that on Friday for those of you who might want to venture into some early morning trading on Monday next week, July 4. All right, gang. As always, thanks so much. Hope the breakdown helps you plan out your week. I use this is my planner, by the way. A lot of folks said, Rob, do you have a planner? And for your trading? I sure do. It has my watch list. It has my trades. It has hot zones, all sorts of things. And I keep that in a printed, good old-fashioned paper and pencil planner. So however you're tracking these things, make sure that you are. I'll see you all in Charts and Coffee tomorrow morning, 9 a.m. Be good to each other, gang. Thanks so much for being here for the show. Take care.